But I think people are still very calm as we move into the fourth quarter of this year. When you look at things like AAII net bulls, it's not pretty. In the past, a 20-week moving average of that number would make you feel good after a 30% rise in stocks. Investors have been very wary of this whole rise. Because of this, we call it the most feared V-shaped gathering. I think the fundamentals of financials are also strong because we know the Fed will be dovish, which is good for the economy. That being said, AI is also a tool that the banking sector can use. It will help them catch scams, it will help them make more money from their businesses. We've talked about this at Fundstrad. The financials may end up getting technology valuations, especially since blockchain makes switching from standard financial rails to blockchain more efficient. Remember that Tether is exhibit A in this whole thing. It makes more steady coins than any other company in the world. It's worth $500 billion, which is about 25 times its profit. That makes it the world's second biggest bank after JP Morgan. Because of this, it is clear that businesses can save a lot of money and staff by building on the blockchain. To give you an idea, JP Morgan has 313,000 workers, while Tether only has 300. Tether employees are worth about 1.8 billion, while JP Morgan employees are worth about 2.6 billion. It's clear that Ethereum is giving people power. When you switch from stocks to the market, you need very different skills because there is no edge. At least when I wrote about companies, I felt like I had an edge because I could check my own sources and channels. That's not possible with stocks, but I did it you could say it wasn't a great time because it was a lot like the beginning of the bear market, but we got back on our feet after writing a report in 2008 CA, ALD Guide to Stock Bottoms Part 1. People still ask for it because we looked at every big bear market since, 1918 or something, made two things clear. One of them said that almost every big bear market is a return to the previous bull market. That's why it's not about time, but how much you undo the wins from before. And the bear markets of 1929, the Great Depression, and 1974 were all 125% retracements of the previous bull market. That means you need to unwind the whole gain and then go down even more. We said that the bottom for the SP would be between 670 and 720 based on the last two bear markets. There was the number 666. Yes. And then there are times when the bear is a measure of the previous bull. That is the last date we said would be possible, July 9th. That was the first thing we had to say. The second conclusion we came to was that this was easier to understand. It took about 7 measures that you saw at the bottom and the order, and it was things like the ISM and employment, but we basically said that employment doesn't get better until the stock market ends. Thus, events that took place before the bottom have nothing to do with basics. So we put out that report in 2008, but on February 20th, the SP went below whatever the minimum level was. It may have been 7 on 10 in February or something. We became bullish, but it was too early because the price dropped all the way to 666, but it was close enough to the bottom that it really made us stand out at JP Morgan because we were one of the first people to think the market had already dropped in 2009. People thought there was a lot of ghost inventory during the great financial crisis. Home prices wouldn't go up again for decades, and since rates were so low, we were in a new normal. But what we were really saying was that this would look like a normal bull market rebound. What was interesting, though, was that the bond side of the business really ran the company in 2009. They were very pessimistic about the chances of a rebound, which was good for the bond. This made people structurally bearish for most of the rebound because investors in stocks lost a lot of money. I learned how important feelings are and how in the world of stocks, when someone gets tired of an idea, they'll say, "Get me out of here at any cost." This is true, even if they are the smartest person in the room. It doesn't bother them. They won't think about the idea again. And yet that's when chances came up, Just a quick note. I'd like to show you the ISM statistics in all its glory. It's easy to see that this was at an all-time high during the bull run of 2021-2022. It started to slow down and go down when the bear market finally started. Let's jump ahead to now. You can see that we're still below this 50 level. At this point, most people think it's more likely that the economy and industry will suffer in the future. So the mood among investors is still not really at full bull mode. Some people may think that AI and other tech stocks are great places to invest right now, but we haven't reached the same level of excitement as we did in 2020 and 2021. Also, the markets haven't been nearly as bad as they were back then. Bitcoin has, in fact, hit all-time highs. Each coin is now worth $126,000. Yes, XRP is 7 to 8 times higher now than it was during the weak market, But if you look at 2020 and 2021, you can see that many of these coins can make 100x gains, just like Solana did. So I do believe there is still more space to go. No one knows for sure where we'll reach the top. While keeping all of that in mind, please keep in mind that things are likely to get a lot busier with everything we're seeing on the markets right now. So you should use the Crusader signal, which is the best trade indicator on the market right now, to get all the best indicators as soon as they come out. You can use this signal along with over 400 other people every day to find great times to enter and leave positions in futures and spots. Making sure you get this sign is important if you want to find something that will help you make great entries and exits. In my community, people are actually posting trades where they are making 171,326% or more on these positions all the time. Make sure you sign up today if you want to be one of those people. Our website has plans for every month, every 3 months, and every yearly. I'll list them all below. Sign up there and I'll see you there. Lots of love and goodbye. There are two main things that keep the business going. The first is that we know AI will have a huge impact on spending. As for the second reason, the Fed has been dovish and has kept the ISM below 50 for 31 months. They have been on hold for 9 months. That means that the rest of the business is getting a lifeline. There will be strong tailwinds, so even a government shutdown won't really change the situation. And now that it's the traditionally good fourth quarter, I don't think values are that high. I mean, Nvidia is still at 26 times earnings. I mean, I still think stocks will go up a lot before the end of the year. Bitcoin and Ethereum are now at all-time highs. And yes, the Fed's plans are very clear. Rates are going to be cut even more. They're not the only ones, Canada and Europe. Also, the economy is very bad right now, and it's possible that they'll have to cut rates even more than they already have to make things better. A fiat currency will lose value so quickly that you'll likely lose more than 10% of your funds every year if you're not in an asset class that does well against inflation. This will create economic conditions that have never been seen before in history. That's what XRP is like. This can be seen in Bitcoin. Right now, Tom Lee is going to break it down for you, so please pay close attention. It's possible that this will change everything about your investing journey. Press the like button to make sure everyone sees this movie. Let's start right away. Underlying factors that keep the business going. One is that we know AI will lead to a huge jump in capital expenditures. The second reason is that the Fed has been dovish, which means it hasn't changed rates in 31 months and has kept the ISM below 50. That means that the rest of the business is getting a lifeline. There will be strong tailwinds, so even a government shutdown won't really change the situation. Today is the fourth quarter, which is usually a good time for the company. I don't think values are that high because Nvidia is still trading at 26 times earnings. I mean, I still think stocks will go up a lot before the end of the year. Making Things has been careful for 31 months, which is the longest period below 50 in history. And you should know that's business trust. It has a strong link to earnings growth. So I think that once that goes above 50, we'll be back in growth mode, which is good for financials, small caps, and the tech trade. I believe it is a gathering for many people. Well, I think the Fed is out of balance and needs to be more dovish than they said they would be last month. This is because, as you know, a government shutdown slows down the economy. They aren't getting any news, and GDP has stopped growing. The government makes up a big part of GDP. On top of that, it makes trust lower. Because people are scared during a shutdown, I think the Fed will have to be even less strict, which is why stocks can go up even more than they already do. I mean, timing is just a normal thing that happens. Things can change